Welcome to all the channel's followers and subscribers. In this video, we're going to talk about the full world of finance, including cryptocurrency and stock market. We'll also talk about the last job report and the relationship between the stock market, crypto, and the interest rate. So grab your coffee. Don't forget to hit the subscribe and let's get started. As we know, September is known to be the challenge month for both stock and crypto. But this year, we don't know. It might bring some surprises. So let's start with the stock market. September is not only about students going back to school, it's also back to paying student loans season. Adding to that, this month might host a very important Fed meeting that will definitely affect the stock market and the crypto. Speaking of the stock market, September brings an extremely important meeting that will affect the stock market. While historically, September has been the worst month in the stock market, Bank of America suggests that typically the S&P 500 drops about 0.7% every year since 1945. The S&P 500 thinks this year might be the opposite. It might continue growing. Just continue its positive trend. Now let's dive into the cryptocurrency. Major financial firms including BlackRock, Fidelity, etc., those huge financial corporations submitted an application to sell US SPOT, which is like an ETF, which is tied directly to Bitcoin holdings. And this is where things get more interesting, because selling an ETF could potentially open the doors for more investors to invest in Bitcoin and cryptocurrency. Shifting gear, if we discuss the jobs report and the unemployment rate, which so far affected positively on the stock market, because that's what the Fed are trying to do, like balance between unemployment rate a little bit higher, close to 4%, but at the same time, they don't want the economy to crash. So they're trying to balance. So far, that is good. Finally, let's unlock the relationship between the stock market and the interest rates. Historically, the S&P 500 tend to soar after the final interest rate. And as we know, lower interest rates will help investors borrow more money, invest, and make the economy grow, and the stock market will go up. But at the same time, lower interest rates will make investors leave the bonds and go back to their stock market. So that will affect negatively on the bonds. So could we see the stock market jump or go up once the Fed stop raising the interest rate? The answer is yes and no. Yes is that sometimes when the Fed stop raising interest rates or reduce the interest rate the first time, some investors will take their money from the stock market and crypto and load it into the bonds to hold the position of the highest interest rate in the bonds market. So that might affect a little bit negatively, but after that usually goes up. So at the end, thank you folks all for watching. Don't forget to hit the subscribe, like, share, and have a good night.